It's working. There we go. Artistic, good to see how you doing. You're the first one in today. Pablo, good to see you. How you doing, brother? How you been? Just trying to pin live as well. Johnny, good to see you as well. Was the bull for Johnny? No, it's just manipulation going on. Q1 2026 is going to be in a lot of words from CEOs, absolutely ballistic. Hello, Miles, CMF. Carlos, good to see you. How you doing? How you been, brother? Hi, Miles. Good to see you. Hello, CMF family. Let's go with facts news. Let's go. How you doing? How you been, Carl? Hello, Miles T. Good to see you. How you doing? Pin to your profile. Pin. There we go. Pin the live show. Okay, let's do intro disclaimer. By that time, everyone should be tuned in for the first part of the live show. There's a mixture of news to go on tonight's live show. We have some essentially crucial news from the International Monetary Fund as well. They haven't talking for a while, but they have put out a public statement, which we're going to go through. It's the first news we're going to cover on tonight's live. We'll bring that to one side. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune into this live Monday, Friday, 10 p.m., long time onwards. For the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. This is episode 414 of the CMF Live show. Also, the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And we do Q&As in this live as well, which means if you do have any questions, put it down in the comment section. More than happy to help you out. Now, on tonight's live show, we're going to be covering news from the International Monetary Fund. We're going to be talking about the US in terms of some perspectives coming out from the councils. We're also going to talk about on tonight's live regarding JP Morgan and their newest perspective on the crypto market space. We're going to go through some news regarding essentially Bitcoin's December outlook going into essentially the ending of 2025. We're also going to be covering news on tonight's live regarding Ledger. There's some security issues going on. We're all going to be essentially going through news on the CFTC also tonight as well. The CFTC has given a certain green light to the crypto space, which is quite bullish, to fairly be honest, going into 2026. We're going to talk about some crypto fraud situations as well on tonight's live and some other news regarding Ripple, CNBC, and so on. So, before we go through the first news, which is regarding the International Monetary Fund, let's go inside the comment section first. Let's see what's going on there, and then we go straight into the first news. Let's see where we're at. We were here. Why taking so long for a bull run? Well, we did have some certain, essentially, situations this year. A lot of things were supposed to happen this year, but most of it got sidetracked by two things. One, Jerome Powell. He didn't play ball with the crypto space at all, and didn't play ball with Donald Trump either, which essentially is why his term is going to be coming to an end, going to be replaced. The second hurdle we had to go through essentially this year was a government shutdown situation, which nobody saw coming essentially. But we should have, because the Democratic Party, again, have been so much against Trump and anything Trump does and try to make him look bad every 5 seconds. So that we should have seen coming, but nobody saw a government shutdown. That was the biggest dent inside the crypto space, and the dent that was following throughout 2025 was Jerome Powell not playing ball with the crypto space until towards the end when he started becoming slightly crypto friendly, but it's too late because he's going to be fired and replaced anyways going to 2026. I'm worried is over and bear market. No, we're not going to be going into any sort of bear markets. And right now, we're just stuck in some sort of a manipulation stage, borderline to regulations is what's really happening. No bull run this year. Then Miles, by the looks of it, Q1 2026 is going to be the run we're looking for. And by the end of the year, we should have maybe the Clarity Act out of the ways, because what was being essentially discussed, 17th December to 18th of December is going to be a sit down regarding the Clarity Act. And according to them, it's going to be settled and dusted and finished by the end of 2025. Going to 2026, we're going to be having the Clarity Act in place. Hi, Miles, is CMF family. Good to see you, Robin. How you doing? Morning, Miles, is CMF. Shelly, good to see you all morning. How you doing? How you been? Good day, Miles. Mike, good to see you all. How you doing, brother? How you been? Now, first news on tonight's live is regarding the International Monetary Fund. And I just want to say thank you so much to everybody before we start the live show. Thank you so much to everyone who has already smashed the like buttons and smashed the retweet buttons if you're watching this on X. Thanks so much to everyone who's also watching on YouTube right now, who's also liked the live and put a comment outside the live on YouTube. And thank you so much to everyone who's also put any comment whatsoever outside the live show, thank you so much for that as well. Hi, Miles and CMF. Good to see you all. Stormy, how you doing? Perfect timing because we're about to go through the first news on tonight's live. So here it is. The International Monetary Fund has given out some sort of a crucial warning. Now, the warning that they have given out is essentially something that everybody should take into consideration. And when I say essentially everybody, I mean governments. All governments need to be under the same sets of regulations for the crypto space to work. That's just essentially the standard fact that should be put into place. Now, it is also something that was discussed in the G20 summit back in New Delhi, where they said essentially how all planes have the same regulations in the sky, essentially same thing should be applied to the crypto space around, essentially, especially G20 countries or beyond the G20 countries. So here is what the International Monetary Fund have to say today. The IMF analyzed regulatory approaches inside the United States, the United Kingdom, Japan, the European Union, Australia, and the list goes on. And they essentially discovered a troubling pattern between all of these essentially countries making up their own regulations for the crypto space. They essentially discovered that while individual countries are creating rules for stable coins, these fragmented systems create inefficiencies and poor interoperability. The fund concluded that regulations alone cannot address the systematic stablecoin risk emerging in our interconnected financial world, which is factual. The rest of the world needs to be on the same page, essentially, when it comes to crypto regulations. Otherwise, we will essentially have certain countries having their own rules, other countries have their own rules, and they don't match. And if they don't match, they won't be able to essentially, move forward inside a crypto space on working together. Now, we do have certain jurisdictions, for example, the UAE and Singapore, for example, doing back-to-back testing with each other and trying to open that bridge up. China's also trying to open up their bridge as well in terms of their own CBDC yen mostly. But we do have certain jurisdictions around the world starting to open some sort of a financial bridge between them so that their regulations are on the same scale. Now, we also have the CORF essentially act, which about 20 countries are a part of it in terms of the security side of the crypto space. So think about it this way. If every country builds a different fence around their financial system, but the digital currency flows freely between them, we haven't solved the real problem. The IMF essentially emphasizes that the primary defense against stablecoin risk must be stronger than mere regulations. And I think this goes beyond stablecoin regulations also, that all regulations, the major regulations inside the crypto space, have to match when it comes to different jurisdictions around the world. And if any country wants to create some separate rules, go for it. But the main regulations for the crypto space should be the same, at least in the G20 countries. So consider these key insights from the International Monetary Fund analysis today. National regulatory systems create fragmentation, essentially, that worsens stablecoin risk. Different issuance methods across countries reduces essentially efficiency. In other words, if every country is going to be creating essentially 50 different types of their own stablecoins, for example, 20 institutions inside the US is going to be creating different types of stablecoins, 20 US banks, 20 essentially Hong Kong banks, or 20 Hong Kong institutions, 20 Japanese essentially institutions, and every institution around the world starts creating a stablecoin. Well, that's just stupid and creates confusion, which I understand where they're coming from regarding the International Monetary Fund saying, well, that just essentially makes no sense. Poor interoperability essentially between systems amplifies systematic dangers also. Macroeconomic stability provides better protection than isolated rules. The International Monetary Fund is basically trying to say that just creating regulations is not enough for the crypto space to be connected on a worldwide basis, that the main regulations have to be the same in different jurisdictions for interoperability to work, or for the crypto space in general to work. But they're basing their argument on stablecoins for the time being. The International Monetary Fund stresses that international coordination represents the critical missing piece in managing stablecoin risk. Without global corruption, essentially without global cooperation, national regulations create essentially a patchwork, essentially, that digital currencies easily navigate around. This coordination needs to address several challenges inside the stablecoin space or the crypto space in general for payments, standardizing essentially stablecoin issuing methods across borders, creating interoperable essentially regulatory frameworks, establishing shared monitoring and response mechanisms in all those different jurisdictions coming together, working together for the crypto space, developing coordinated macroeconomic policies that consider digital currency impacts. The report also essentially suggests that when countries work together on macroeconomic essentially fundamentals, they do create a more resilient foundation against stablecoin risk than any single regulation essentially could achieve. Managing stablecoin risk requires looking beyond individual regulations to broader economic pictures, strong macroeconomic essentially policies and international cooperation provide the foundation that essentially isolated essentially rules that cannot be achieved. And again, it goes back to essentially what I said a few days ago. Essentially, we don't want temporary movements inside of crypto space. We do really want a strong foundation inside of crypto space so that we don't have any more shaky grounds. At stablecoin, essentially, as stablecoins continue to grow, this coordinated approach becomes increasingly urgent. The choice is clear. Either we build a globally coordinated system that addresses stablecoin risk at their macroeconomic roots, or we face potentially destabilizing consequences as digital currencies outpace our fragmented regulatory responses. Now, the ending statement essentially that they put out was, in the simplest words, if we don't get a grip on essentially, if we don't get a grip on the stablecoin space or the crypto market space now, and we don't move fast enough in terms of regulations and regulations that are the same between our essentially nations, we may essentially fall into a risk essentially situation where the crypto space, there's too much money inflowing into it, there's too much happening, not enough regulations to essentially take control of the market space, and then they lose grip of the market space in general. So in the most simplest way, the International Monetary Fund is saying, one, countries need to create regulations faster because the crypto space is growing too fast. Two, the regulations they create must match essentially different jurisdictions. Otherwise, that will just create confusion somewhere down the road, which both of these statements I agree with 100%. But it's good to see that the International Monetary Fund is telling countries to hurry up and create their regulations because the crypto space is growing at a rapid pace right now. Now, moving on from what the International Monetary Fund had to say to the US. But before we talk about the US, let's go inside the comment section first. Let's see what's happening there, and then we'll go straight into the next news. As I said, this is live. As always, if you do have any questions, put it down inside the comment section. I'm more than happy to help you out. So let's see what's happening inside the comment section. Hi, been Miles of CMF. Lena, been doing great. Good to see you. How you doing? I've been receiving minute and transactions into my Trust wallets in the last few days. I know there's a scam. They must be toying. I should do is stop these. Regarding people receiving very, very small amounts, like dust amounts inside their crypto space. So if you've ever opened up your crypto wallet, it could be Trust Wallet, MetaMask, or essentially your Ledger or your Tangent, and you're receiving these like small or dust essentially payments, and you're wondering to yourself what they are. Some may be related to scam, some may just be essentially, you know, fees that were supposed to be paid. But if it is a scam, just don't do anything. Just let you essentially receiving these small little dust. As long as you don't try to find out which wallet is from and take any sort of interactions going that way, then you're perfectly safe. To safeguard yourself inside the crypto space, one, don't click on any sort of random links that you receive from text messages, WhatsApp messages, direct messages, or on social media. Two, there is no such thing as free money inside the crypto space. If you ever see these promotion videos or links saying, you know, earn more on your cryptocurrencies, earn 1,000 on your cryptocurrencies, stake your cryptocurrencies or whatever, it's a complete scam. Three, if you receive a text message saying Binance is doing a transaction, they just sent you a code. If this was not you, call this number. That is completely fake. That could be any exchange. Essentially be Coinbase sending you a text, but it's not really Coinbase. Ignore any messages related to cryptocurrencies because Binance, Coinbase, Crypto.com do not send you random texts ever, and they do not essentially put any sort of numbers for you to call back. And if you receive small little dust payments inside of your crypto wallets, just ignore them. Let them keep on coming in because they don't harm your wallet unless you try to find out which wallet, essentially which wallet it came from, which address it came from, and going through it that way. Then that's essentially when you start falling for the scam. But if you're receiving them, just receive them. You don't have to do anything. Just ignore it and keep on receiving those dust payments. And don't ever click on any random links. Now, regarding crypto scams, we're going to go on essentially on tonight's live show as well because essentially Ledger has essentially revealed something which Android phones might be at risk. But we're going to talk about that a little bit later on tonight's live. Good evening, Miles of CMF, Bull XRP. Good to see you as well. How you doing? Good evening, Miles of CMF, Free and Forever. Good to see you as well. How you doing? Miles, I sent you a text message since yesterday. Can you please have a look after the live show? I just need to get your opinion about it. Thanks in advance. Carl, no problem. Sorry about that. I'll take a look at it and get back to you. Happy Pisces. Good to see you as well. How you doing? How you been? Now, the US is what we're going to talk about next on tonight's live. And essentially, it's what's happening in terms of the crypto space in the last month, essentially, of this year. US think that tank experts warns about Bitcoin, and it reveals the most critical date that will determine its fate. Now, there is some essentially, situations happening around Bitcoin. Some have disappeared from the media, which was the Epstein situation regarding Bitcoin and some other situations regarding Bitcoin. But here is essentially what's going on. Bitcoin continues to receive a stern warning from traditional financial circles despite recovery efforts in recent weeks. The Council of Foreign Relations senior fellow, essentially Rebecca Patterson, said in an interview with Bloomberg on Open Interest that Bitcoin is still a speculative asset and should not be viewed as a hedge against inflation or the dollar. Now, this was an interview that happened on Bloomberg, trying to make essentially Bitcoin look bad. Now, there are faults with Bitcoin, as some essentially might say there are zero faults. There's faults with majority of the crypto space, to be fairly honest, but those faults can be overcome by different, essentially depending on the project itself. But in Bitcoin situation, there are two situations that are, making it difficult for it to breathe. One is the Epstein situation. We still don't know if it is linked to him, but if it is, some people will care, some people won't care. Two, quantum computing is a massive threat to Bitcoin as well, but there's some are claiming this could be 2040, some claim this could be 2030, 35, and so on. So still a little bit far away. Now, Patterson argued that investors should clearly understand essentially how Bitcoin will impact their portfolios before purchasing it, saying people say it's a store of value or diversifier. It might be essentially that way over time, but it still isn't today, according to her perspective. According to Patterson, the real risk is the crypto market's potential for contagion essentially to other financial sectors, a topic discussed for years and hasn't essentially disappeared. The expert noted that systematic impacts of the FTX collapse was limited, noting that today's ecosystems has a much more broader financial connection. Patterson said that MicroStrategy is at the critical essentially threshold at this point, and pointed essentially out the MS essentially CI will decide on essentially January 15th whether the company will remain in the index. This is a real risk of contagion. This uncertainty is one of the reasons why Bitcoin has fallen so sharply in recent months. If MicroStrategy remains on the index, capital flows from passive funds and will continue. If it is removed from the index, this support will disappear, potentially triggering another downward pressure on Bitcoin, according to her. Now, Patterson also argued that the increasing involvement of traditional financial institutions and public companies in the crypto market could increase volatility, which is true up to a certain extent. There has been too many public companies essentially opening up some sort of a Bitcoin account just to jump on a bandwagon of MicroStrategy and pump up their essentially stock prices. Now, a lot of companies did this. Majority of them did do well. The best ones essentially were Meta Planet, essentially following MicroStrategy's footsteps, and a few other ones. The rest of the companies that just tried to jump on the bandwagon because their stocks weren't doing too good, they didn't do too good at the end in any cases, to be fairly honest. But they didn't have any sort of a massive impact on the crypto space. But MicroStrategy will, if it gets pushed out of an index, is what she's essentially arguing. The more cryptocurrencies grow and the more they become intertwined with traditional systems, the greater the impact of any shock will be, said Patterson, urging investors to closely monitor this expanding area of interactions. Look, I agree with her up to a certain extent. Yes, having too much exposure in some sort of speculative assets, true, it could go completely sideways. And another big essentially downfall of Bitcoin may be the founder of Bitcoin. We don't know who it is still, and we don't know when he's going to be deciding to dump his entire bag on the market space on the early days of his Bitcoin wallets. He is holding a tremendous amount. He's holding more than all institutions pretty much put together, you could say. So she has some points and some not so much points. But she's saying basically don't rely too much on Bitcoin. She didn't badmouth the rest of the crypto space at all, just fixated on badmouthing Bitcoin, but with some sort of facts as well, I would have to say, honestly. Now, JP Morgan is what I want to talk to you about next. And this is honestly why we need regulations to move away from Bitcoin. Honestly, crypto projects need to decouple as soon as possible from Bitcoin, because even though Bitcoin was the starter of this entire digital world, it can also be the one that completely drags it back down, which is why we need to decouple from Bitcoin, and we need regulations for that to be happening. So XRP, XLM, XDC, HBOS, and all which I've been saying for years, just need to be decoupling from Bitcoin essentially ASAP, and that's why we need the Clarity Act to be happening. Now, JP Morgan, one of the largest US banks today, has made a prediction on Bitcoin. So going from Rebecca Patterson's perspective on Bloomberg to JP Morgan's perspective now on Bitcoin, which is quite interesting because JP Morgan was an absolute Bitcoin hater, not so much now, completely changed their perspectives. And this is their newest announcement today. JP Morgan, one of the US's largest banks, predicts that Bitcoin could rise to as much as $170,000 in the next 6 to 12 months, despite the current essentially market space we're in. The bank strategy essentially based this estimate on a volatility adjusted valuation model that compares cryptocurrencies to gold. They said our volatility adjusted Bitcoin gold comparison shows that the theoretical Bitcoin price approaching $170,000, suggesting strong upside potential for the next 6 to 12 months. JP Morgan's analyst wrote, Bitcoin has undergone essentially a sharp correction in recent months due to the strengthening risk of trend uncertainty surrounding the 2026 interest rate path and concerns about Michael Saylor's company strategy, trading around $92,593. Bitcoin has been declining since the beginning of the year, retreating essentially 26% from its peak above $126,000. However, JP Morgan believes that Bitcoin may be exhibiting price behavior more similar to gold over the long term. This correction was particularly evident in April when strong inflows into Bitcoin aimed a sell-off in US stock markets fueled by tariff concerns. However, the MSCI essentially is considering removing companies with essentially digital asset weighting above 50% from the indices and will announce this decision on January 15th, which essentially could play out bad for MicroStrategy. But again, JP Morgan, one of the biggest haters essentially towards Bitcoin, now being essentially the one saying Bitcoin is actually going to do a reversal and go on the uptrend. If this rule goes into effect, the BTC bull from strategy will be removed, as we discussed. The session could go very bad for them now. However, JP Morgan notes that a positive decision could also trigger a stronger recovery wave for essentially strategy and Bitcoin. So January 15 comes around and they change their minds. They say, no, it's okay if you're holding a tremendous amount of crypto assets, more than 50% essentially in your portfolios, you're perfectly fine to stay on the indices, then that essentially could be another catalyst for the market space. If the MSCI essentially decision is positive, both MicroStrategy and Bitcoin will likely return stronger to pre-October essentially 10 levels. Now, moving on essentially from JP Morgan's perspective on the market space and Rebecca's perspective on the market space to Bitcoin December outlook. And the perspective that we're going to talk about next is from Coinbase. Coinbase's institutional signal, a potential reversal after brutal November. So you have JP Morgan saying, no, we're on the reversal side, and Coinbase is backing what they're saying. Coinbase Institutional has called December the potential make it or break it month for digital assets. So if you're thinking to yourself, is this over, regarding this month completely going, then 2026 being the next catalyst for us to move up? According to Coinbase, this essentially year still hasn't ended and a lot of things can happen this month. The company stated in its monthly report that the prevailing conditions were favorable for a positive and a possible reversal in Bitcoin despite the brutal November in which BTC underperformed. According to a report by Coinbase Institutional, the cash drain from markets may be ending following essentially the Federal Reserve's return to the bond market. Essentially, the firm also opines that the development was favorable for non-risk assets such as cryptocurrencies. The report also stated, with quantum tightening ending, the Fed is backing essentially the bond market and the drain of cash from the markets may be behind us. That's usually a good risk-on asset like essentially for cryptocurrencies. The Coinbase Institutional report found that Bitcoin and other cryptocurrencies performed dismally essentially in November, where essentially with BTC falling more than 3 standard essentially diversions below its 90-day average, and Bitcoin also entered December under extreme pressures, with market data showing it started trading essentially mid-high to $80,000 essentially dollars last week. The figure is roughly 30 to 40% lower than its previous peak of $120,000, making one of the essentially the weakest performance in a long time. The Coinbase Institutional report added, this is what Coinbase had to say. While fear remains elevated, we believe conditions favor essentially a reversal in December. Some analysts say that December sentiment pointing to a potential Bitcoin reversal is leading towards greater essentially bearish risks and caution essentially bullishness. And analysts essentially who favor the bullish sentiment point to numerous factors according to a school of thoughts. Essentially, BTC is still above the previous cycle peaks and infamous 2022 to 2023 bear essentially market lows, while the 30% to 35% correction essentially was significant. The experts believe a reversal for Bitcoin was not unusual with an essentially broader bull market for such a volatile asset. Additionally, the data with essentially from the derivatives markets showed that investors liquidated essentially hundreds of millions of dollars in leveraged long positions in late November and early December as fund rates essentially normalize and open interest falls from the highs. And analysts see less fuel to motivate any further essentially for selling. Moreover, to essentially the recent ETF outflows from custodies to derivatives and institutional gateways were much more substantial than in the past cycles. According to essentially this school of thought, if macro conditions essentially stabilize, the channels would easily support a renowned essentially move towards a possible reversal for Bitcoin. Under the experts' view, December essentially would most likely mark a rough, essentially but constructive bottoming essentially process and potentially setting the stage for a run back towards $100,000 mark and beyond. So according to Coinbase, we could still be on the verge of $100,000 Bitcoin and above this month. According to Coinbase Institutional, the general sentiment in December may be fragile still, accompanied by conditions that set the stage for a possible reversal in Bitcoin and other cryptocurrencies. Analysts also believe the flagship cryptocurrency can break and hold above $100,000 if leverage essentially stays under control and spot demands remain strong and long-term holders let the trend extend. So everything that's coming essentially out of Coinbase Institutional is backing what JP Morgan had to say, that we are in some sort of reversal. But Coinbase Institutional essential perspective is that this month is the reversal that's going to be essentially that we're looking forward to, and above $100,000 we go inside the crypto space for Bitcoin, and the rest of crypto market space will follow Bitcoin's footsteps going on the uptrend this month. Now, moving on from Coinbase's perspective, JP Morgan's perspective, and Rebecca's perspective, from Bloomberg, to Ledger. Before we talk about Ledger, let's go to the comment section first. Let's see what's happening there. Straight into the next news. Basically, good to see you. How you doing? Good evening, Miles and CMF. Manny, good to see you. How you doing, Manny? Peace, Miles. Good to see you as well. Sun Moon, good to see you. How you doing? Now, Ledger. If you are somebody that uses an iPhone, you are pretty much safe in this essentially equation. But if you are somebody that uses an Android, you could be possibly at risk, essentially. Evening all, Susie, good to see you. How you doing? So, Ledger finds a security flaw, MediaTek, essentially, in MediaTek chips. So Ledger has publicly came out and said that basically if your device is using some sort of a MediaTek chipset, which is the 7300 chip, your Android device is at risk. And if you are holding a wallet, crypto wallet on it, your crypto wallet is definitely at risk as well. So threatening essentially Ledger's security team, Don John essentially has identified a vulnerability in the MediaTek essentially 7300 chips, essentially threatening smartphone stored crypto wallets globally. This isn't just a jurisdictional essentially issue, it's all the Android devices that carry the MediaTek essentially 7300 chip. Your phones might be at risk, your crypto wallets might be at risk in general. The Ledger Dojo team discovered a flaw in the MediaTek 7300 chip. This vulnerability allows an electronic magnet fault injection attack, risking control of smartphones and crypto wallets. The discovery essentially was shared to raise awareness among users and tech developers. The vulnerability in the MediaTek, the essentially 7500 chip, emphasizes the need for crypto users to be aware of risk associated with smartphone-based wallets. MediaTek confirmed the vulnerability, which is even worse, that essentially what Ledger essentially has found is true, because the company that builds the MediaTek chips, the company itself has came out and said, yep, there is a vulnerability. And I like how the company didn't come out all this time, waited for somebody to find their flaw and then say, yeah, there's an issue with our chip. Confirmed the vulnerability and stated that the chip was not intended to withstand such attacks, which makes it even worse. The flaw allows attackers to extract private keys from software wallets, impacting cryptocurrency security on affected devices. Immediate effects include increased concerns among cryptocurrency users over smartphone security. The vulnerability indicates that mobile wallets may not be secure for long-term storage of key data, promoting shifts towards hardware solutions. I would have to say, if you are somebody that's keeping some sort of hot wallets or even your cold wallet apps on a device, as much as essentially I am on both sides, I like iPhones and I like Samsungs, I would have to say when it comes to security, you're better off using an iPhone, because iPhone doesn't use too many third parties in general for essentially their devices, unless it's essentially their screens or their camera lenses. But that's okay. When it comes to the infrastructure itself, or essentially the chipset itself, Apple builds all of their own things, which makes it essentially more secure going forward, rather than Android devices that do tend to use third parties for a lot of essentially their devices. So I'm not bashing Android in any sort of way if you're an Android person, because as I said, I like iPhones and I like Samsungs as well. So in my own personal perspective, if you are somebody that is holding a hot wallet or a cold wallet, iPhone probably might be the best solution right now. However, any Samsung chips using Samsung's own chip, essentially the X1 chip that they use, or even Google, for example, Google Pixel phones, they use their own chipset as well. They're calling the G1, G2, G3. That's perfectly fine as well. So Samsung chips by themselves, good. Google phones create their own chips, good. Apple creates their own chips, good. Any other device that uses MediaTek, which Samsung sometimes does, sometimes doesn't, that's a bit of a risk issue because they're third-party companies. The security issue leads to broader decisions about the use of consumer-grade chips and handling sensitive data. This incident may prompt regulatory reviews and updates to consumer device security standards. Experts suggest moving keys off affected devices and increasing focus on secure hardware storage. They're basically saying if your Android phone carries that MediaTek chip, get your wallets off that phone now. Similar past instances have essentially pushed the industry towards stronger solutions, underscoring the need for robust device protection and risk management. Now, I hope everyone got that. If you are an Android device holder, please make sure what your essentially chipset is. If you're carrying a Snapdragon chipset, that's okay. If you're carrying, if you're an iPhone user, you're perfectly fine. If you're using a Google Pixel phone, you're fine because they use G1 chipsets. If you're using Samsung, make sure it's Samsung's own chip or a Snapdragon chip, not a MediaTek chip, because then you're in trouble. Now, moving off that news from Ledger and MediaTek themselves confirming the vulnerability in their device chipsets, to spot crypto trading is finally coming to the US. The CFTC has given a green light to spot trading in the US, which is quite a big news. Before we talk about that, let's go inside the comment section first. As previously, this is live, which means if you do have any questions or comments, go for inside the comment section. More than happy to help you out. So let's see where we're at inside the comment section. Interesting. They keep using the word reversal. I think they are suddenly telling us that Japan reverse carry trade is going to be triggered very soon and create a financial tsunami loss. And TXRP saved the day. Interesting perspective. Happy places, I'll be honest. Greetings, Miles of CMF. Hope all is well. Really good to see you, brother. How you doing? But definitely, it could be an outcome, 100%. Now, spot crypto trading green lighted by the CFTC. Big news. The CFTC today has formally opened the US essentially exchanges to list spot crypto trading, marking the agency's most direct move yet to bring essentially digital assets under the federal market oversight. It is massive news regarding CFTC coming and taking a step forward inside the crypto space, green lighted spot trading. Spot trading is perfectly fine. Futures makes the market volatile, but spot trading is perfectly fine. A public notice from Commissioner essentially Caroline D. Pam states essentially that Americans can now trade essentially listed spot crypto trading products directly on CFTC regulated exchanges. So essentially, she also said that the move reflects a shift towards keeping digital assets activity inside supervised US markets rather than offshore platforms. Essentially, Caroline Pam noted that the urgency approved new pathways that allows exchanges to list spot Bitcoin and other crypto products under existing commodity rules. She also added that under the existing commodity rules, she added that the framework aims to increase transparency, apply standard market safeguards, and extend the same oversight used in futures markets. The related filing essentially outlines how exchanges must meet core principles, including surveillance standards, risk controls, and consumer essentially protection measures. If also essentially confirms that listed crypto spot products will fall under the CFTC enforcement's reach. According to the announcement, the goal is to create a regulatory structure that integrates spot crypto trading into the broader US derivatives ecosystem while maintaining and establishing compliance expectations. Today, the Commodities Futures Trading Commission confirmed that Americans will be able to move forward under essentially the release number 9145-25, if anybody wants to look up the act. And less designated contract markets essentially list spot Bitcoin and other digital assets contracts under the agency's existing commodities rules rather than pushing activity offshore. This is big news regarding spot trading greenlighted by the CFTC, because this is the biggest step the CFTC so far taken for the crypto space. And they're doing it right at the end of the year. Commissioner Caroline Pamdi said that the goal is to provide safe US markets with full federal oversight instead of leaving retail traders on foreign platforms. The US wants these traders essentially inside the crypto space to come back to the US. They want essentially all these cryptocurrencies to be listed on regulated market spaces. Now, moving on from essentially the crypto space essentially getting greenlighted by the CFTC in terms of spot trading, big news. And the oversight essentially which the International Monetary Fund was talking about, where regulations need to be pumped out a lot more faster because the crypto space is expanding at a rapid pace. Nice to see CFTC on the same day they make the announcement from the International Monetary Fund takes this step forward. Moving on from that to a massive crackdown on crypto scams. Before we talk about that, let's go inside the comment section first. As I said previously, this is live, which means if you essentially have any comments, go for inside the comment section. Now, let's see where we're at. Miles, mine uses a MediaTek chip. Should I delete the Tangent app? I've logged in months. Not logged in the app. Make sure it's not the MediaTek 7300, because that is the one that is impacted so far. So if you are using essentially a Samsung device, type in Google. If you're using an Android device, type in Google, does my Android, essentially whatever your phone may be, my Samsung this or my Samsung that, because Google Pixels don't use MediaTek, neither does essentially iPhones. If you're using a Samsung phone or any other essentially brand of Android, it could be Xiaomi phones, Huawei phones, or whatever it may be, type in the name of your phone in Google and say, what is my phone's chipset? And then Google will tell you, what your phone's chipset is. If it's the MediaTek 7300 chip, then get your wallets off that phone now. So the MediaTek chip 7300. If it's that, get your wallets off the phone. If it's not the MediaTek 7300, you're perfectly fine for the time being. Now, spot crypto trading essentially is what we talked about next. The next news we're going to go from tonight's live is the biggest essentially crypto crackdown there is. So Japan will be forced to increase their interest rates to the borrowers who borrowed money at 0%, and that will be huge, especially when they calculate the foreign exchange rate on top of that interest rate. They calculate it, yes, it would be. Not logged in the app. But you're perfectly fine if you're not logged into the app either, to be fairly honest. Now, Europol uncovers 700 million euro crypto fraud network across 9 countries. So, Europol has just completed a multi-year operation that dismantled an international cryptocurrency fraud network responsible for laundering more than 700 million euros. The investigation spanned through Germany, Spain, Cyprus, Belgium, France, Malta, Israel, and several other countries, exposing a sophisticated operation built around fake crypto investment platforms. There are so many fake investment crypto platforms and so many replica fake investment crypto platforms. The amount of fake Ripple websites I've seen, or fake essentially crypto wallet websites I've seen, it is absolutely ridiculous. If you ever want to make sure any essentially any platform is legitimate, first you could go through their social media page. So find the verified social media page for crypto.com and their customer service, for example, Binance and their customer service, Coinbase and their customer service, and the list goes on. If you ever want to make contact with any of these firms or make sure an email you received is legitimate, then go straight to these platforms themselves when they're verified on X and message them. Or you can also go to a website called scamadvisor.com. Scamadvisor.com is essentially a website. It's like a search engine on the website where you could paste essentially emails that you might receive. You can paste essentially email. You can essentially paste phone numbers that may contact you, pretending to be from essentially these platforms. And you can paste, essentially copy and paste, and the website links of any platform. And Scam Advisor will do some sort of background checks and check on other platforms that may have flagged up this website, this phone number, or this email essentially. And then it will tell you if it's a scam or not. And for double reassurance, just go to the social media platforms of those legitimate companies, make sure those emails are legit or not. Some platforms also, if you didn't know, like Binance, for example, or MEXC Exchange, on their own websites, they have a section where you can check by copy and pasting an email address that you may receive. So, for example, if you receive an email from Binance that says, this is Binance, someone's trying to withdraw from your account, is this you, this and that, and there's an email at the top. Take that email, put it into Binance's section where it essentially says email checker, and then Binance will tell you if that's a legitimate Binance email or a fake one. And most of these platforms have that section inside them. If you didn't know, now you know. So, authorities said that the case began with a single fraudulent website built quickly revealed a sprawling, essentially, ecosystem. Victims who were enticed through misleading online ads promising high returns. That's one of the biggest issues inside the crypto space as well. If you're seeing adverts inside the crypto space that say, high returns on your money, stake your crypto with us and earn 1,000 essentially % on your money, or essentially you would earn some sort of free money. There is no such thing as free money in this world. Everything comes with a catch. The first major operation took place essentially on October 27, 2025, when coordinated raids were carried out in Cyprus, Germany, and Spain at the request of the French and Belgian authorities. This is a long operation that they did and just revealed today. 9 suspects were arrested and investigators seized 800,000 euros in bank accounts, $415,000 in cryptocurrencies, $300,000 in cash, and high-end watches, electronics, and documents. These are all the monies the criminals spent, the 9 criminals that they caught so far that have spent using other people's cryptocurrencies. The second phase on November 25th to 26th focused on affiliated marketing firms operating across Germany, Belgium, Bulgaria, and Israel. There were companies, marketing companies within these regions that were pretending to be and supporting fake crypto companies. These companies were found disrupting the scam essentially advertisements on social media, often relying on deep fakes, fabricated media essentially clips, and fake celebrity endorsements. I just want to point out to another thing that I've recently come across as well inside the crypto space that everybody should be fully aware of. On X, I have seen verified government accounts posting fake crypto scams. And then when I check to see what it is, it could be the agriculture department of essentially some random Middle Eastern country, or essentially that never actually existed. There are platforms actually on X that are affiliated with government platforms, genuine government platforms, that are promoting fake crypto scams. I saw one of them promoting fake Ripple scams, and it's under the agriculture of a South American country. So please be careful. Essentially, inside the crypto space, the scams are just, on another level, to be fairly honest, when they're using government accounts to push these adverts out. Again, there is no such thing as free money. As long as you understand that key sentence, there is no such thing as free money. You would essentially be skipping past those adverts. Now, Europol described the case as one of the largest in its kind in Europe because it was multiple jurisdictions around, essentially in Europe and around the world, working together to crack down on these crypto criminals. The investigation revealed more than 700 million euros was laundered through a complex network of cryptocurrency exchanges using digital currencies to counsel essentially the illicit flows of funds. The operation follows earlier efforts in which Europol and its partner agencies shut down a crypto mixing service, Crypto Mixer, part of a broader push to disrupt large-scale financial crimes in digital asset sectors. So please be aware, if you're inside the crypto space, the scams are on another level. I mean, as I said a long time ago, the more security grows inside the crypto space, criminals will get a lot more advanced in what they do inside the crypto space to steal your funds. Just today, I received 2 text messages, one pretending to be from Binance, saying someone's trying to do a transaction, the other one trying to say that somebody's doing a transaction on my Coinbase account. Both of them were complete lies and scammers, essentially. And all I did was swipe, delete, pretty much. Now, CBDC is what we're going to talk about next, and predictive market spaces inside the crypto space, because predictive market spaces are absolutely on a rapid, they're growing at a rapid pace, to be fairly honest. So a big move has just happened inside the entertainment field. CNBC is about to be featuring with Kalshi essentially a real-time forecast next year. Predictive crypto markets essentially are going to be aired starting next year on CNBC. So alongside CNBC, essentially the Money Box or CNBC Squash Box and so on, we're going to be seeing essentially predictive crypto markets now displayed on CNBC. Kalshi essentially has announced a new multi-year partnership with CNBC, expanding its essentially presence across major US media networks. The agreement arrives shortly after a separate deal with CNN. Essentially, the beginning in 2026, CNBC will integrate Kalshi's real-time prediction data across its TV programming, website, and mobile apps. The arrangement includes a co-branded page on Kalshi's platform, offering users direct access to essentially market-based probability forecasts for economic and policy events, which is crazy, to be fairly honest, because a long time ago, predictive market spaces was essentially seen as a place where, you know, crypto is making, for example, politics look bad. When the presidency essentially, you know, when the presidency was happening of who's going to become next president of the United States, with essentially Kamala Harris and Donald Trump, the predictive market space inside the crypto space was massive. The party that did not really like the idea of essentially the crypto space existing was the Democratic Party. They said it makes politics look bad and cheap. And that is why essentially one of the biggest markets, you know, predictive market spaces was taken down, and their founder essentially was arrested for a little while. But now, moving forward, the predictive market space is about to be aired 24/7, essentially on CNBC Live regarding the market space. Not only is crypto integrating itself inside the financial sector, or essentially inside the AI sector, or the Web3 sector, or the gaming sector, so, but it's also regarding the internet, regarding Web3, but also integrating itself on the entertainment side. The partnership would allow CNBC audiences to track market essentially probabilities on topics such as Federal Reserve rate discussions and new integrations, and it will help people stay better informed about the world around them. Though there were doubts about how audiences may react to introductions of predicted-based metrics, the move represents a shift towards data formats that connect financial news with real-time market expectations. The CNBC partnership essentially is Kalshi's second large media agreement announced this week. The company recently also finalized a similar agreement with CNN. On the same day, Kalshi also revealed it had raised $1 billion at an $11 billion valuation. A source familiar with the deals noted that the money exchanged hands in both partnerships, though Kalshi essentially disputed the claim reported by Axios regarding licensing fees. Kalshi also essentially recent expansion reflects the rising use of prediction markets that allows users to trade futures contracts tied to real-world outcomes. These markets essentially track events ranging from elections to weather conditions. Kalshi described the partnership as the next evolution, moving essentially from data about what's happening now to real-time forecast about what's happening next. So, predictive market spaces in the crypto space coming to CNBC and CNN starting next year. Now, moving on essentially from prediction market spaces coming to the crypto space to the Cayman Islands. Before we talk about the Cayman Islands, let's go inside the conversation first. Let's see what's happening there, and then we go straight into the Cayman Island news regarding the crypto sector. Buy XRP, watch oil, don't miss out. Buy XRP, watch oil, don't miss out. Oh, buy XRP, 100%, yeah. 100%, I agree. No financial advice, obviously. All facts, no such thing as free money. Absolutely. Do you understand this blockchain was set up for total surveillance? No. Really? Blockchain was set up for total surveillance? I did not see that one coming at all. I am, surprised, shocked, flabbergasted. You don't say. That was sarcasm, by the way, Melvin, if you didn't catch that one. But yeah, of course I know it's for total surveillance. I've been seeing this for the past 3 years or 4 years, talking about the origins of cryptocurrencies coming about. 2008 market crash, 2009 Bitcoin pops out of nowhere. We don't know who created it. World Bank does testings on blockchain. It was successful. COVID starts. They needed a reason for everyone to move from cash. Cash carries germs. No, I really didn't see that one coming. Crypto, total surveillance. I'm shocked, surprised. I'm just messing with you, Melvin, but of course I know that. I checked, sorry, it's a Qualcomm, essentially SM6225 Snapdragon 680 4G mouse. Do you use an iPhone or Samsung for this? I use both. I use Samsung and essentially iPhone. So, but my Samsung doesn't carry MediaTek chip. It carries the Snapdragon chip as well. But yeah, Samsungs are fine. Just make sure it's the Snapdragon chip or Samsung's own chip, or Google Pixel carries their own chipset, and iPhone. You don't need to buy an iPhone to safeguard your crypto assets. In terms of safety, iPhone builds their own chips, which is good. Google Pixel phones build their own chipsets, good. Samsung does build its own chipset, but sometimes they use MediaTek, and sometimes they use Snapdragon. Snapdragon is safe. Their own chip, Exxon, essentially is safe as well. The MediaTek chips, essentially, are the third-party companies. They don't really create smartphones; they just create chipsets. So that's what you want to stay away from. So you don't really need to buy an iPhone to safeguard your crypto wallets. Just make sure your chipset isn't the MediaTek one. You could buy a Pixel, a Samsung, and an iPhone to safeguard your wallets. Just make sure the chipset isn't the MediaTek 7300. I brought a cheap Samsung just for the wallet. iPhones are way too expensive just for wallet use. I agree. Shock. 100%. iPhones are really expensive. 100% I agree with that. But yeah, don't essentially just make sure it's not the MediaTek chip. Is Tangent still safe on Android? Yes, as long as your device isn't running the MediaTek 7300. For anyone that does have essentially thoughts about their phones, if their phone is safe or not for their crypto wallets, message me after the live show and I'll send you the article so you can have a look through as well. And I'll show you, just if you just essentially go to Google, type in does my phone carry this chipset, it will tell you. But if you do get stuck, message me and we'll go through it. Dang, yeah. Now, moving off that to the Cayman Islands, but I'm here to help everyone as always, so direct message me whenever you want and I'll help you as well. Now, Cayman Islands. Cayman Islands is experiencing a sharp rise in demand for legal frameworks, supporting Web3 companies, decentralized autonomous organizations, and so on. The Cayman Islands is becoming an absolute hotspot for crypto startups. Cayman Finance reports that the number of registered funds grew 70% year over year. Of registered funds grew 70% year over year to surpass 1,300 by the end of 2024, with more than 400 additional companies already formed in 2025. These structures are increasingly used as legal governance centers for large Web3 ecosystems. According to the association, at least 17 funds with treasuries exceeding $100 million are now registered in jurisdictions reflecting the scale of the projects moving into the country. DAOs, a blockchain-based organization governed through essentially smart contracts and essentially token holders voting, are seeking clearer legal protection, especially after the recent US court decisions in essentially the Lido case. Now, the ruling essentially accelerated interest in formal legal structures offshore. Melissa Lim, the partner and co-head essentially of global fintech group at Walkers, said the shift is unsurprising. Businesses in digital assets are looking for jurisdictions that both offer legal uncertainty and operational flexibility. The Cayman Islands gives them the confidence to scale responsibly and attract a wider range of participants. The Cayman Islands are historically known for shelf companies, the Cayman Islands. Most banks don't accept essentially people that have bank accounts in the Cayman Islands because it's just where you would register your bank account if you want to keep it off the books. Not everybody in the Cayman Islands is a crook, but it does turn out to be that where essentially the most growing is happening. Now, Rakeen, the assistant director of the fintech and virtual essentially asset sector at the Cayman's Finance, added that Cayman's combination of modern legislations, professional services, and transparent oversights is driving the trend. Cayman fund essentially companies offer DAO and Web3 communities the flexibility they value and the legal clarity essentially global participants accept. This is essential as ecosystems move from experimentation to managing significant treasuries. The rise of Web3 funds coincides with the Cayman Islands implementing the crypto asset reporting framework CARF. Now they're saying essentially the Cayman Islands is going to be introducing the CARF essentially legislation, which essentially puts it a part of other jurisdictions that are trying to safeguard the crypto space from illicit activities and so on, and essentially AML, anti-money laundering laws and so on, which is brilliant that the Cayman Islands is doing this, safeguarding, make sure that the money coming into these crypto projects is legitimate money and not money that's trying, to hide or be off the books. Lawyers note essentially the CORF does not apply to structures that merely hold assets such as protocol treasuries and investment funds. It only covers organizations actively providing exchange, brokerage, or custodial services, which is more than enough coming from the Cayman Islands. This regulatory clarity is already influencing major projects. I mean, the list is, tremendous of the amount of Web3 companies starting up in the Cayman Islands. It is absolutely ridiculous. But again, it is positive news for the crypto space because, it's bringing liquidity towards the table, bringing confidence towards the crypto space, showing the crypto space as a mature space with all these investments flowing in. So if you thought, nobody's really investing into the crypto space from the institutional sector, well, the Cayman Islands has been growing 70% year over year in terms of crypto company startups. Now, Deutsches Börse is what we're going to talk about next on tonight's live. Deutsches Börse and Kraken partner for market integrations. Deutsches Börse and Kraken plan to bridge traditional financial markets with digital assets through a new strict partnership. This venture initially focuses on institutional trading, custody, and FX infrastructure. Before we talk about that, let's go to the comment section first. Let's see where we're at inside the comment section. I can see for my Remedy Note 14 Pro, CPU, Hilo, G100 Ultra, Octa-core Max 2.2. Carl, you're perfectly fine then. I asked DeepSeek and Gemini, they said my phone carries the MediaTek Hilo G100 Ultra. What do you think? I have Tangible on Coinbase and Binance. You should be safe, Carl, because it's only the MediaTek 7300 chips, so you're perfectly fine. No financial advice at all, but for the time being, you're perfectly fine. Now, Stefan, but you're perfectly fine for now. No financial advice. Stefan, CEO of Deutsches Börse, emphasizes that the partnership combines their regulated market infrastructure with Kraken's innovation in digital assets. Deutsches Börse coming together with Kraken Crypto Exchange is big news. It aims to enhance institutional client access to financial assets. This partnership is a strict fit that combines Deutsches Börse Bank's regulated market infrastructure with Kraken's innovation in digital assets, emphasizing a goal of shaping essentially the future of digital capital markets for institutional clients. Now, as I said, there's so much focus on institutional clients inside the crypto space because it is the next big trend regarding that matter. Every crypto exchange, every institution, every bank is now focusing on the next clientele, the institutional sector, the high-profile clientele, because that's all that matters going to 2026, which also equals to big, big money for us. Because I said this 2 years ago. I said, before the regulations come in, you want to enter into these crypto projects. And I said, these my exact words and my exact essentially interactions, which were, you want to enter here inside the crypto space. If anybody remembers the TikTok days, I said you want to enter the crypto space here with XRP, XLR, XDC before the institutional money comes on top. And that's going to happen alongside regulations, essentially. So essentially is what's happening right now. Going into the next year, it's all about institutions, which means institutional money, which means we entered here, institutional money on top. You're essentially in the clear, in other words. Immediate effects include potentially stronger institutional adoption and tighter trading spreads for crypto assets. The EU collaboration might enhance access to regulated futures through Eurex. Market implications could also improve changes in FX liquidity and execution quality, affecting institutional positioning. This move could also influence regulatory signals indicating a greater acceptance of crypto as a part of traditional systems. Future outcomes also depend on regulatory approvals for tokenization and trading derivatives and via essentially Kraken Crypto Exchange. The partnership may set precedents in integrating digital assets with traditional markets. Evidence suggests essentially financial improvements in liquidity for BTC and ETH through enhanced institutional involvements, and historical trends do show past success in combining crypto with existing financial infrastructure lead to broader adoption by regulated markets. Day by day, towards the end of the year, we're getting, and even this year, we got a lot of announcements, but day by day, towards the end of the year, we're getting huge announcements. Even the month where crypto was at its worst, which was actually last month, we're still getting major announcements regarding so many institutions entering the crypto space, creating some sort of crypto departments for next year. It's all about the next clientele. Retail clientele is old news going into 2026. It's all about the new clientele, institutions and high-profile clientele, which is good for us, which means they've sucked as much money as they possibly could from the retail section, Now it's time for the institutional section and the high-profile clients, which is perfectly fine for us because we entered here. Let them, essentially fill the gap for us. Now, also, on the side of institutional clientele, institutional money, crypto exchanges, opening up departments for high-profile clientele for next year, to Russian parliament. Russian parliament to prioritize cryptocurrencies and stablecoins next year. Russia is also going to be taking cryptocurrencies very seriously going into next year. Cryptocurrencies and stablecoins will be the focus of the Russian legislative efforts next year. A prominent member of the parliament in Moscow has essentially indicated, creating legal frameworks for digital finance will be our top priority, said Russia. The high-ranking lawmakers emphasized as Russia moves to regulate its crypto space in 2026. Russian legislators essentially will put a particular emphasis on adopting rules for crypto for countries and markets with essentially for digital financial assets, cryptocurrencies, and stablecoins in 2026. Russia is going to be essentially completely green-lighting crypto space in 2026. The pledge came from the head of the parliamentary body with significant influence over the legislative process in this field. Digital finance will be one of the most important topics of the new year, along with essentially the banking and the fight against fraud. Detailed essentially autonomy, the chairman of the Financial Markets Committee at the State of Duma, the lower house of the Russian parliament. Legislators will prioritize the establishment of the legal framework in these areas. The Russian deputy insisted in a post on Telegram, summoning up essentially the results of a discussion on the matter held at a conference devoted to banking law. Quoted by the business news portal RBC, the Russian news essentially today, this is essentially what was said. The focus will be on the development of a market for digital financial assets, cryptocurrencies, and stablecoins. Russia is focusing on next year and greenlighting both of them. That means liquidity, money entering the crypto space. The issuance and placements of DFAs or instruments such as tokenized assets and securities were regulated with the Russian law on digital financial assets, which went into force a few years ago. The latter of two categories representing decentralized digital currencies like Bitcoin or fiat-backed stablecoins remained outside of the Act's scope. Interesting enough, the rest of the crypto space and also the rest of the stablecoins are perfectly fine for what's going to be discussed next year. Bitcoin and USDT are on shaky grounds in Russia. Apparently, Tether and Bitcoin are a big no. The rest of the crypto space is a green light, including other stablecoins as well. They're all green-lighted. They are still essentially largely in a gray area in Russia, although some related activities such as cryptocurrency mining, for example, were regulated with dedicated legislations adopted in 2024. Russian government to grow domestic DFA markets starting next year. Debt-based DFAs will be treated like traditional bonds for tax purposes. It was also unveiled. Essentially, the Russian parliament believes that this will facilitate the rapid expansion of the crypto market space in Russia. His committee approved a bill designed to regulate the issuance of digital financial assets secured by mortgages. The deputy is also convinced that once passed by the Duma, the law will further broaden the implementation of these products, he explained. This will open up opportunities of integrating the DFAs with the housing markets and other assets, strengthening the investment role of digital finance as an alternative to bank lending and traditional bonds. Tony essentially also reminded that the Central Bank of Russia, this essentially the CBR, has already announced its intentions to introduce comprehensive crypto regulations in 2026, moving away from its long-standing position against permitting free crypto transactions in the Russian economy. The regulator also signaled this week it's ready to essentially back the relaxation of rules governing circulations of cryptocurrencies. Currently, crypto assets and derivatives can be acquired and traded and spent within very limited experimental legal regimes in Russia. The monetary authority is currently discussing the Ministry of Finance on how to expand investor access and regulated transactions in essentially outside or inside essentially of Russia. This week, Bank of Russia's first deputy governor, Vladimir, essentially also unveiled that two regulatory bodies are considering whether to classify stablecoins as a separate category. Also, Russia has recognized the Russian ruble-pegged stablecoin A7A5, which accounts for almost half of the non-dollar essentially stablecoins as digital financial assets for almost half of essentially their own stablecoin. So, Russia is about to be greenlighting the crypto space and the stablecoin space starting next year. Their central bank, who hated the idea of cryptocurrencies, now loves the idea of cryptocurrencies. What a change of a twist of an opinion, I would have to say. Same way as JP Morgan. JP Morgan hated Bitcoin, hated cryptocurrencies. Now setting out predictions for essentially Bitcoin's footsteps, agreeing with Coinbase. The change of tone inside the financial sector from the central banks, from the institutions, from any other big player inside the cryptos, inside the financial sector, or hedge funds, family offices, so on. The change of tone going into next year is quite interesting, because they're the clientele next year. They are the clientele. Now, before we talk about the next news on tonight's live, which is essentially regarding Ripple, let's go inside the comment section first. Let's see what's happening there. Thanks, Miles. No problem. Call anytime. Miles, I'd like to get your opinion on the tensions between the US and Venezuela, and also between China and Japan. What do you think will happen there? Will there be an impact on the crypto market space? Great question, because wars do impact the crypto market space. Now, the question on China and Japan, is a war going to break out between China and Japan? Probably not, because that'd be quite stupid for China and for Japan. So I don't personally think that war will ever break out, because China knows for a fact that Japan is going to be backed by the US. It's just guaranteed that's going to be happening. Any other essentially smaller country or bigger, larger country next to Japan, for example, Australia, will straight away be backing Japan from the pressure from the US. Essentially, New Zealand, and the list just goes on. So it's just a stupid idea for China to even start a war. And I'll be very honest. On a power scale, it's a stupid idea for China to start a war. On an economic scale, it's also a stupid idea for China to start a war. You see, China's essentially biggest thing of essentially, regarding their own GDP is selling. Selling is China's, the most simplest word to use, for example, is selling. China produces and it needs to sell to bring that cash flow in. If China starts a war, it will be sanctioned pretty much overnight by Donald Trump, because Donald Trump doesn't waste any time. And then every country that does business with China will stop. And once that happens, China is going to be on a very, very, very shaky ground. And their own real estate market space is not doing too well right now. And if Chinese factories produce and overproduce and cannot sell outside of China, well, that will essentially, make China collapse from within. So China has to think really, really, really hard. Are we going to start a war and jeopardize our entire country and collapse it pretty much within the span of a week or months? Or are we just going to act tough and stay on the sidelines? In most cases, the smartest option would be just to act tough and stand on the sidelines. Because if China even thinks attacking any country, they will be sanctioned overnight by Donald Trump. And then the EU will close its doors to China from any sort of purchasing. Other countries around China will do the exact same thing. America will do the exact same thing. Canada will follow through. So will essentially South American companies. So will essentially South America. And if you think even for a second that the Brexit countries will come forward and still do business with China, out of all the Brexit countries, the one country that might come forward is Russia. The rest of the Brexit countries would not do that in their wildest dreams. India, for example, who's also part of BRICS, the core founding members, essentially wouldn't do that either. Now, you would say, well, India buys essentially oil from Russia and sells it off. Yes. But they wouldn't be as stupid enough to do that again, because India has already been sanctioned for buying oil from Russia. Now, according to India, the Biden administration said it's okay for India to buy essentially oil from Russia to stabilize the oil market space. That's India's perspective. Trump's perspective is, you're a traitor, you're going to get sanctioned. If India takes another step in the sanctioned sector, then it's going to end very bad for them in the long run. So China starting a war will be the stupidest thing Chinese government could ever possibly do. Yes, China is a very, very strong country, incredibly strong country, but it still will be their doomsday situation if they ever start a war. Economically, they will be crushed. Trump, just to put in perspective, showed his power once to the entire world. The power the US has. And how he did that was not by sending out missiles or showing the strength of America's nuclear power plants. No, Trump didn't have to do any of these things to show America's strength on the market space. Trump comes out and says, we're going to be sanctioning China's tech industry. The entire world market collapsed within a span of a few seconds. Countries lost billions inside the market space. Institutions lost billions on a worldwide scale. Retail section got absolutely obliterated. From the stock market, from the crypto market space, economically, every country felt the burn. Trump didn't have to show one missile, one American advanced plane, American advanced, essentially anything weaponry. No. He just had to come on the news and say sanction China, tariff situation on their chipsets, because China's not listening to us. The world entirely collapsed. Pretty much. Everybody saw what happened inside the markets. The stock market, crypto market space was absolutely brutal. World market space, and everybody thinks the US has no voice. Not everybody, but a lot of people inside the world thinks the US has no voice. The US has lost their power. China and Russia are in control. BRICS is in control. No, they're not. The US doesn't even have to show off their weaponry. They just have to come on the news and say, we're sanctioning China. The world just goes, span of a few seconds. Every country feels the burn. So, China and Japan, China would have to be pretty damn stupid to start a war. On your other part of the question, US versus Venezuela. That, is it going to be having some sort of impact on the crypto market space? Not really, I'll be honest. Because the war between the US and Venezuela is technically still, it's happening as we speak. Small boats, small situations are happening with the US essentially attacking these Venezuelan boats or so on with missiles and, claiming that they are doing some sort of illicit activities. And regarding Venezuela, there are many reasons why the US is interested in Venezuela. One of the main reasons that the US is interested in Venezuela is obviously, regarding its energy resources. Two, Iran, believe it or not, and China use Venezuela as a hotspot for money laundering. The Iranian government has been buying quite tremendous amount of land from Venezuela. Tremendous amount of land from Venezuela and building. The Iranian government has been helping Venezuela, supplying it with arms, supplying it with missiles as much as they can. And America doesn't like that Iran is at their doorstep, pretty much. America doesn't like the idea that Iran is at America's doorstep and using Venezuela as a hotspot for money laundering. There are many reasons that the US is interested in Venezuela, and most of these reasons won't come up on the news because some of these stuff shouldn't be said on the news and some will be said on the news. But yeah, Venezuela is used as a hotspot for criminals and for illicit activities and for Iran's government to money launder. China also uses Venezuela for fentanyl. There's a lot of reasons wrong with Venezuela. The Venezuelan president is an absolute scum. He's an absolute piece of scum. The Venezuelan president, absolute piece of scum. And he should be removed from power. He has deprived his own citizens so much where they can't barely breathe. Venezuela could become an extremely wealthy country. Unfortunately, the Venezuelan president doesn't care about his own citizens and is, head to toe filled with illicit activities, greed, power, everything. So even though it might look like essentially the US is attacking Venezuela for no apparent reason to some people, there's many reasons why the US is interested in Venezuela. Energy resources, stopping Iran from being at their doorstep, stopping the money laundering, stopping the money that is used for other activities, other illicit activities, which I'm not going to be mentioning on this live show, in Venezuela or coming out of Venezuela into the US. There's many reasons why the US is interested in Venezuela. But the man running Venezuela is scum. Honestly, the way he treats his own people, the way he treats his own country, it's just not right. And is Venezuela and US situation going to be impacting the crypto market space? It hasn't so far, is what I would say. It hasn't so far at all. But going down the road, who knows? Sometimes the most baseless news can be over-exaggerated and impact the crypto market space. And that is only because we don't have the right regulations in place, so we can't go into utility, and the crypto market space could be manipulated by the most exaggerated news. It could be a very small piece of news, but it could be over-exaggerated. But there are many reasons wrong with Venezuela. And there are people actually defending the president of Venezuela, which just blows my mind. There are liberals out there, essentially, that are supporting Venezuelan president and going against Trump. Honestly, Trump could introduce the cure of every world disease possible to date. He could come out with a cure for every possible disease, honestly, and people will still hate Trump. Not everyone, but the liberals will still hurt Trump, essentially hate Trump. The man could honestly cure the world from poverty. Trump could cure the world from poverty, from diseases, make everybody wealthy. The liberals will still hate Trump. That's the level of brainwashing sometimes it goes to, where they're now in favor of the president, essentially the man in charge of Venezuela, who does so much horrendous things to his own people, which I cannot be discussing on this live show ever. But blows my mind there are people supporting him over Trump right now. Honestly, as much as you may hate Trump, at least Trump is not starving its own citizens. But that man is, and that man has been doing it for over longer. I mean, the years just go on, over a decade. That man has been starving his own citizens for a very long time. At least Trump isn't doing that. As bad as you might think Trump is, but at least he's not starving American citizens. But that man is. The majority of his country. Now, Ripple is what we're going to talk about next on tonight's live. Before we talk about that, let's go to the conversation one more time, then we'll go straight into Ripple news. Well said, Miles. Always on point, especially regarding the US and Venezuela. Thanks for your analysis. I hadn't seen it in that way. Your opinion is very interesting. I didn't know how many hours you spend reading articles, but you're fascinating, my friend. Well done. Thank you so much, Carl, for the kind words. Also, I'm on point regarding the Democrats and hate for Trump that lots of individuals have. Yeah, honestly. Now, the liberals are the worst. Ripple's senior executive officer and managing director essentially joined MasterCard at a key Binance event. And there was few things said regarding the crypto market space moving forward, and Ripple's essentially CEO's perspective, which we're going to go through, and the executive officer managing director from Ripple as well. So Ripple's senior executive officer / managing director of the Middle East and Africa, Reese Merrick, took the stage at the recently concluded Binance Blockchain Week to discuss financial payment rails. The Ripple executive shared his views on where essentially Ripple is heading, discussing the benefits of XRP and RLUSD on the XRP ledger in moving value. Merrick joined Christian Rao, the SVP Digital Assets and Blockchain at MasterCard, and Nicola, VP of Payments at TON, in a thoughtful discussion on financial payment rails on the Binance event. According to MasterCard's Christian Rao, mobile payments were new 10 years ago, but now they are the standard, comparing this to cryptocurrencies. Rao stated that digital assets are becoming relevant for the next generation, allowing them to borrow against and spend. Rao alluding to digital assets, saying it is the world changing with the need for shift across the board. In other words, Apple payment, Samsung payment, Google payment, that's old news. New payment system is crypto. Merrick highlighted the growing crypto and stablecoin acceptance in line with Ripple CEO Brad insights. So this is essentially what was shared. Ripple executive Reese recalled his early conversations years ago, especially in Europe, when mentioning crypto or stablecoins made people uncomfortable, but the narrative has changed. Merrick added is table stakes for banks and institutions to have digital asset strategies. As reported, Ripple's CEO, Brad Garlinghouse, highlighted growing acceptance for stablecoins and saying that more people are recognizing stablecoins and their value. According to Nicola, the VP of Payments of TON, and stablecoins offer a lot of utility for users. The discussion follows as financial institutions globally are increasing in recognizing the value of blockchain and stablecoins in modernizing how money moves. A few people were on that panel having this discussion in front of an audience. Ripple's executives, TON's members, Binance's members, and so on. At the Swell event, the Ripple Swell event that just recently passed in November, Ripple announced the collaboration with MasterCard, as we all saw, and WeBank and Gemini to explore the use case of Ripple's RLUSD on the XRP ledger, and initiative designed to enable RLUSD stablecoins on the XRP ledger for blockchain-based payments. and everything else that's happening inside the financial sector for Ripple or for any of the essential blockchain projects out there. The CEO of Ripple, Brad Garlinghouse, told investors that 2026 could be crypto's most ever bullish year yet. Ripple CEO pointed out that the US, 22% of the global GDP, is no longer openly hostile to crypto, and that major financial groups are reversing their stance, which is true. Major financial institutions in the US who hated crypto now love crypto. JP Morgan coming out of the woodworks from where they were. JP Morgan essentially said that if they were in charge of the crypto space a long time ago, they would have banned it. It's only used by thieves and criminals. Now JP Morgan creating platforms for the crypto space. I mean, the list just goes. I mean, Vanguard itself said they'll never touch the crypto space. Now look at them. They're going to be offering crypto services in 2026. So you could definitely tell where institutions stood before and where they're standing now going to 2026, where every institution is pretty much creating departments for the crypto space. And so are banks, and so are governments looking into regulations. So what Brad's saying essentially regarding the crypto space is no longer essentially, the US especially is no longer openly hostile towards the crypto space, and major financial groups are reversing their stance is true. This shift underpins the idea of a big 2026 rally. Such statements add to XRP news stories, even if they focus mainly on the entire crypto space. But with Brad coming out, essentially saying on a stage that 2026 is going to be this bullish year for the crypto space ever. Because 2026 is all about institutional money. Retail money is old news. Institutional money is next year, and high-profile money, hedge fund money, VC money, family office money. That's what it's about essentially next year. On that note of it's not all doom and gloom, and a lot of things happened this year that were not in our favor, but towards the end we got some things done essentially in our favor this year. But our genuinely biggest hurdles this year was one, Jerome Powell didn't play ball at all with the crypto space until towards the end. But it's too late. He's going to be removed from his seat anyway. He's going to be replaced. And then we're going to have another Fed chairman. Two, government shutdown from the Democratic Party through an absolute hurdle, a spanner in front of everyone. Because crypto ETFs were essentially postponed. Crypto essentially regulation discussions were postponed, some of them. The Clarity Act wasn't able to pass due to government. So there's a lot of things that one particular party did that damaged the crypto space. However, it's not all doom and gloom. A lot of things were handled this year as well that were all positive. On that note, we have reached the endings of tonight's live. We've reached the endings of tonight's live. This was the CMF live show. The CMF stands for Crypto Mouse Family. My name is Miles. You can tune to us live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulation. It's pretty much vital information for you to know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And this was episode 414 of the CMF live show. Drop a like if you haven't already. Smash the retweet buttons if you haven't already on X. Drop a comment outside the live as well on X. And if you're watching this on YouTube, drop a like and put a comment. If you have done all of those things, liked and retweeted and put a comment outside the live, thank you so much. On X or on YouTube, thank you so much. If you haven't seen it, remember, smash the like buttons and the retweet buttons. And if you followed or subscribed during this live stream, watch us on X or on YouTube, and you follow and subscribe, thank you so much and welcome to the CMF family. If you subscribed and followed as well, welcome to the CMF family. You can tune to this live Monday to Friday, 10 p.m., long time onwards. All time, Monday to Friday. Tune in. It's free. Everything I do is completely free. Now, before we do go, obviously, let's go to the comment section first. This was happening. Good night, Miles. The CMF X. Okay, we were here. Thanks, Miles. Have a great night and see you tomorrow, same time. Autistic, see you tomorrow, same time as usual as well. Good night, Miles. The CMF Excellent News. See you tomorrow. See you tomorrow, free and fair, same time as usual. Thank you very much, Miles. Have a great night. Let's go, Carl. See you tomorrow, same time as usual. Thanks, Miles. Valuable insights as always. See you tomorrow, CMF. Let's go, Shadi. See you tomorrow, same time as usual. Night, Miles and CMF. Pablo, see you tomorrow, same time as usual as well. Thank you, Miles. Have a great night and see you tomorrow. Mike, see you tomorrow, but same time as usual. Good night to Miles and all the CMF. Thank you for a great live and news. Let's go, JP. See you tomorrow, but same time as usual. Thanks, brother Miles. Let's go, Commentators. See you tomorrow, same time as usual as well. Thank you a bunch for all the updates, Miles. Have a lovely night all. Let's go, Lena. Lena, see you tomorrow, same time as usual as well. I will see everybody. Outstanding show as always. Remember, folks, to leave a like, share, and a comment for support. Peace. Let's go, Ray. Ray, see you tomorrow, but same time as usual, and facts. I'll see everybody tomorrow, same timing as usual. I feel so much smarter now. Let's go, Susie. I'm very happy for that. And I'll see you tomorrow, Susie, same time as usual as well. I'll see everybody tomorrow, same timing as usual. Everybody have a great time or a good day, depending on where you're around the whole CMF. And if you follow, subscribe, welcome to the CMF family as well. And see you all tomorrow, sometime as usual, for episode 415 of the CMF Live Show at 10 p.m. London time tomorrow. See you everybody tomorrow.